Hey friends and family of Oxford Wealth, we're coming at you with another OWA Live, and since it's tax season right now and tax deadlines have been extended to May 17th, we thought, hey, we've got some more time to talk a little bit more about taxes. So right now on our website, we have an article that we're featuring that's the 5 most overlooked tax deductions. And so we're going to talk just a little bit about that. We're also going to include a link in the description so that you can take a look at this and see for yourself whether you're making this mistake or not. Deduction number one that we're missing is reinvested dividends. For those of you who have non-qualified brokerage accounts, if you have mutual funds that are throwing off dividends, usually those are taxable income. And under normal circumstances, that would be added to your ordinary income as a taxable dividend. However, if you reinvest those, you can deduct that with an itemized deduction schedule. So if you itemize and you have dividends that you're reinvesting, make sure that you are deducting that out of your taxes. Number 2 is out-of-pocket charity. Out-of-pocket charity meaning donations that you make. In a lot of circumstances, those donations that you make don't have a receipt. As long as the charitable gift was less than $250, you can claim it without a receipt. If it's more than $250, you need a receipt to be able to claim that off of your taxes. Think outside the box with this one too, not just cash. If you make any donation to a charitable institution, maybe you made a run to Savers or to Goodwill or something like that, make sure that you remember to claim those as you itemize again. Number 3 is state taxes. If you paid on state taxes, you need to make sure that you deduct that out of your itemized deductions as well. Just remember the Tax Cuts and Jobs Act limited a $10,000 cap to any state tax deductions, so keep that in mind. Number 4 is Medicare premiums. If you are self-employed and paying those Medicare premiums, you may be eligible to deduct those premiums off your taxes. Make sure to talk to a CPA specifically about that, but don't overlook the possibility of deducting your Medicare. And number 5, income in respect of a decedent. So if you inherit money or if you have some kind of inherited IRA, there are ways that you can deduct the taxes that are owed by the decedent off of your own tax returns, specifically with those inherited accounts. Again, consult with a CPA specifically about that, and also feel free to reach out to us if you have any of those concerns. We would be happy to make those deadlines. Remember the tax deadline for everyone in the United States, except for a few states, it's May 17th. You've got an extra month or so. For those individuals in the disaster-stricken areas like Texas, Oklahoma, Louisiana, your tax deadline has been extended to June 30th. So you've got a little bit of breathing room still. We will see you next week with another OWA Live. If you have any questions or concerns, feel free to drop them in the comments below, and make sure that you like and subscribe this video so that you get all kinds of content from us, good information about what to do with your finances. Thank you very much and see you next week.